Hey traders, Todd Gordon of tradinganalysis.com. How you doing? It is now Thursday already, the 21st. Holy cow. About 9 minutes to go until the market close. I want to do a live position update, get you updated on what's going on in the market. We're only doing a free video about once a week. There's so much happening. I just had a client leave my office who's in the wealth management and talking all about what's going on here. So I want to update you what's going on. Now, we just sent out a push notification to our clients, and hopefully that focuses camera. No, you're not. You don't want to focus. There you go. You can pause and read it if you like. But basically what we're doing is we are going to book profits on an Amazon butterfly that we have on, but also we have a QQQ hedge on, a put spread that we have on to protect against long positions that we're holding in our swing desk or stock swing desk, and long positions that I hold in my own accounts and in the wealth management as well. So we're still bullish. I understand what's going on with interest rates. I want to try to explain that to you quickly. I'll tell you why I don't think it's the end of the world. I think this is a corrective pullback. I want to adjust the QQQ put spread that I have on. It is a hedge. I want to extend the reach a little bit lower, and I try to do that all within a few minutes. Okay, so here we go. Let's dive in. Okay, so first thing is yields are moving higher. So this is the 10-year US yield, and this is going to be a monthly chart. And we just broke above the September of 2022 high that was right around 4.25, 4.3. Now we're trading 4.48 in the 10-year yield. Interest rates going up are generally a bad thing, right? Well, there's a lot more to the story, and I don't have a ton of time to explain all the intricacies of what's going on, but it's not nearly as bad as what the headlines will have you believe, okay? And we just went into a lot of detail with our research clients about, why rates are moving up, why the dollar's moving up, why it's actually a good thing, because it's more focused on the yen carry trade, not so much pure dollar strength. So a long story, but it's correlated with these yields, okay? So the 10-year yield is breaking higher, and it is now at the highest level that we've seen since October 2007. Now, that is pressuring the stock market. This is a daily chart. And from the Elliott wave point of view, it's potentially what we call an ending diagonal, which this is your resistance zone, anywhere from 4.48 up to 4.74. Okay, this is going to be, again, the headlines tonight are going to read like interest rates break to highs not seen since, call it 16 years. And the headline's going to be bearish, and people are going to want to sell the market, right? But again, I have it as resistance is pending. And really what's happening is long-term rates are catching up to short-term rates. That's a good thing. All right, so the 2-year yield, right, which is going to have more of an impact as to where the Fed is going to set their policy, which they just left rates on hold, and now we're looking at a November meeting, which is only like a 28 or 30% chance of them hiking. The 2-year yield is pretty much anchored right here at about 5 to 5.25. What's happening is long-term rates are going up, the 10-year, as the 2-year is kind of staying between 5 and 5.25. It's breaking out, but it's not going crazy. And what that's doing is that's taking the 2-10 yield spread and it's making it less inverted. See the red and blue down, or the red and green down here? As this guy is moving higher, this is the difference between the 2-year yield and the 10-year yield. Down here below this white line is inversion. Well, as this is moving up, which the only way that's happening is if the 10-year yield goes up while the 2-year yield stays flat, that takes us out of yield curve inversion. Okay, there's a lot there, I know, but just take my word from it. From my point of view, the 10-year moving up to where the 2-year yield is not all that bad. The market, the initial knee-jerk is for the market to sell. Yields up, oh my God, get out of stocks. Well, again, all it's doing is normalizing the yield curve. And listen, do you think that a 10-year yield at 5% is going to be reason for investors to sell their stocks or not buy new stocks when inflation is running at 3% so they can make a net 2% real return? I don't think so. Housing market seems to be doing okay. Housing starts to come off. Single family housing starts to come off. Multifamilies come off. But the consumer seems to still be doing fine. Look at Walmart at all-time highs. Look at travel stocks. Look at home builders just pulling back. We haven't seen too much in terms of corporate financing problems. The lesser strong, the weaker fundamental companies that are small caps that don't have access to funding, they're under pressure. The well-capitalized, good fundamental companies do have access, and they are embracing new technologies and they're doing well. That's why it's such a stock picking market. Okay, so that's a long setup, but hopefully that all made sense. Okay, now let's get into the actual position of the market. Okay, so let's look at the QQQ. The way I see this is the NASDAQ QQQ ETF. I think this is a pullback that began here in July. I think it's a three-wave pullback that may reach support down around $347. And what this is, I've got 2 minutes. I got to do this quick. Basically, the 100%, your 348.17 is you take 100% projection. So what's this distance travel? That's 8.3%. You do another 8.3%, and that gives you the 100%. You do a 1272 extension of X. This is going to be your targeted support zone that I think may be the end of minor 4. Okay. Now, we have a NASDAQ spread on as a hedge. Okay. And I've been showing you guys this one for a while. And I just sent the trade alert out to clients. I have to do this in a minute 10. So we have the 370, 360 put spread. Okay, I'm up $1,600 on it. The whole trade cost $1,300, and this is to hedge our $250,000 portfolio that we keep live with our clients. So what I'm going to do is I'm going to do this quick. I'm going to do it in legs. I'm going to, you know what? Let's just do it this way. I'm going to do it a little bit more efficiently because I got to be quick. Oops, not the quad Qs anymore. All right. So what we're going to do is we are going to go to. We're going to go out to the October 22s. Okay, and I've got 25 seconds. I don't know if I'm going to be able to do this. All right, I'm going to buy vertical. I'm going to buy the 360, and I'm going to sell the 350. I'm trying to extend the duration. 366. Can I get it? 9 seconds. Oh, I got it. I got it. Woo, with 4 seconds to go. All right, so what we're doing there, so we got that done. And also what I have here is this NDX put spread. Again, I have long stock that, with XLK, NVIDIA, Qs, Meta, it was kind of nasty over here on the day, down 8,000. But, with hedges, I made 11,000 today. So it was, overall a positive day because I kind of overhedged with this NDX 15,150, 15,000 put spread. Now we closed at 14,694. So we're through the lower end of the put spread, but it still has negative delta. So it's still, negative expression. So, I'm still up, I'm up $7,500 on this trade. Okay. So hopefully that makes sense about what's going on. And again, just to kind of pull it back as we're not fighting the craziness of the live market, I'll flip over to the SPY. As we're trading here, for the SPY, I'm thinking that, this is going to be a wave 1 from the October of 22. This is 1, down in 2, up in 3, and then the correction that is similar to the QQQ, the equivalent level in the SPY should be around 427. Okay, so that's going to be the 100% A versus C, as well as the 1272 extension of B down in C. Okay, so that's going to be a very, very good kind of a textbook level for this pattern, which is an ABC zigzag, right? If we start breaking below 410, that's when, my outlook that we are in a corrective pattern is going to be called into question, because that's when we are going to break into the wave 1 territory. Okay, you want to stay out of the wave 1 territory. So it seems scary, as I mentioned, but this would be good support. And as I mentioned, Long-term rates are now catching up to short-term rates, which is normalizing the yield curve. The Fed's on hold, and with the stock market selling off, they're really not, Powell, I don't think is going to continue to bash us over the head here and say higher for longer. The big thing that's going on here is the market was afraid for so long that the Fed was going to tighten us right into recession. Well, they're not tightening anymore. The market's only like a 30% chance of an increase in November, 70% chance of being on hold. The big thing that the market's worried about now after the Fed yesterday was, are they going to cut enough? So, 2 months ago, they were worried that they're going to tighten too much. And now we're like, okay, now we know they're not going to tighten. Now we're going to worry about 6 to 9 months from now that they're not going to cut enough. You see where I'm going with this? Again, 5% Fed funds, 5% 10-year yields. I don't think that is going to be enough to cause a significant recession slowdown in the ability of corporates to service any floating rate debt as well as individuals. We'll see how the housing market settles in. As I said, some consumer discretionary stocks, housing stocks, hotel, Walmart, you look at that stock at all-time highs. Financials have been rotating in on the model. We're seeing XLF is doing pretty well. So, this for me really just seems like a market that is in a technical correction. The market was coming into was going to be 6 consecutive monthly gains in August, which really doesn't happen. So August, people came in a grumpy mood, wanted to sell off. Then we came into September, which is a seasonally weak month. So we're getting seasonal selling in September. Say that 3 times fast. Maybe that's a good subject for the video. So, for me, it seems scary at the time, but it's not surprising. I'm bullish, but as you can tell, we hedged. So, I think it's business as usual. If we break back through 427 here in the SPY, then okay. That could be problematic and we'll have to look for lower levels. And, if we start breaking down through 420 into 410, then that's when I'm going to start to get concerned on my bullish thesis. But while we're above this zone, I think we're in good shape. All right, guys, I hope that helps. Check us out at tradinganalysis.com. I wish you safe trading and investing out there. See you on the next video update. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.